Hello and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for Saturday, December 26th, 2015. We'll also take a look at a couple closed trades that we made in the core and trading accounts, so you get an idea of what exactly we do in both of those accounts. And we will also take a look at a couple new watch list names just to give you an idea of how we prepare for the following week. So without further ado, let's get started. First of all, I wish everyone had a Merry Christmas. I'm looking forward to a new year. I want to thank everyone for their continued support. It's more than I ever thought possible. The way that this service and this website has grown, the people I've met, it's a truly humbling experience. So I want to thank you for being there. I want to thank you for continuing to tune in and watch these videos. And again, hope you have a Merry Christmas, Happy New Year. If you're not celebrating Christmas, I hope you just enjoy the long weekend that we are having, and a nice wind down to the end of the year. So market, as far as last week went, we've been talking about the idea of lower volume, not really meaning much in the way of moves. Not that you can't make money with those, but just that you have to understand that all these moves are happening on low volume, and it's pretty evident if you look at the last couple weeks of trading. We had these big moves down, big move up, big move down, and on Monday, Tuesday, and Wednesday of this past week, we had a nice move up, little rally, and then sure enough, Thursday markets were half day here in the U.S. So really not much, down 2.25 points on Thursday. So the concern I have here, and we've talked about this for some time now, if we first of all look at the weekly chart, I'll actually make this a little bit bigger so it's easier to see. There's essentially three key levels that are in play. Okay, so we have the 1883, which was really the level that held back in August. We have the 2130, 2120 area that has been resistance throughout the year. And we also have this level here at 1986. All right, and you can see that became support earlier in the year, and again was resistance back in August, and again now supporting this move from the last few weeks. So those are the three main areas. My concern now is we're not seeing the buying that we need to see, and that could very well be because it's the end of the year. All right, so it could easily be that not a lot of people are looking to buy right now. Usually you have end of the year window dressing, which means if money managers aren't in the stocks that they want to be in, it's the same for a quarter, and they're not in the stocks that they want to be in, that they the last couple of days they'll start to put on a big position in those, so that this way when their funds go out and their reports go out for the quarter, they could say, hey, you know what, I was the smart guy in the room and I was long, I don't know, whatever, long something that's been going up, where in fact they just bought it 4 or 5 days ago. All right, so it's a way for them to kind of pat themselves on the back and fool their clients a little bit. Not the most ethical way to do it, but everybody has to, I guess, somehow make a living in this business. Either way, so you have it at the end of the quarter and you have it at the end of the year. So my concern is here that we're not seeing a lot of buying, and the big concern that I have is that we are putting in this type of little downtrend. So what is very possible is that we just bounce around in this little triangle pattern from this downtrend line, from this uptrend line, and then essentially break out either direction. Now, with that said, that's called a symmetrical triangle pattern from technical. It's a technical analysis pattern. And what it says is that if you do consolidate in a triangle, that typically the move out of the triangle continues the previous trend. So with that said, the previous trend was higher. Okay, you can see we moved higher, then maybe go into this triangle. So that would be expected that we would break out of this triangle. Now, again, never ever happens as easily as that. But just be aware of it, that it is possible that we break out from this downtrend line after maybe consolidating for another couple weeks. All right, so that is the S&P futures. If we take a look at the SPX itself, all right, you'll see a very similar situation. Okay, you can see we've broken the uptrend in the SPX. Again, we'll just zoom in on the weekly chart. All right, we've broken that uptrend in the SPX. We've identified these key levels once again. Okay, you can see them right through here. All right, so in the SPX, again, because it's a little different than the futures, that's 2127, 1995, and 1895. All right, we're coming in, testing that 1995 level. Concern I have, looking at this, is we're tested the backside of the trend line and now appear to be rolling over. And with that same idea, you can see that we are essentially putting in a little downtrend. All right, a little channel to the downside. We're trying to rally from the lows back up. All right, so what we need to see in both the futures and the SPX is we need to see some type of consolidation right below this downtrend. All right, and then a breakout, because from right now we can't bounce from all the way. I mean, not that we can't. It's very unlikely that we bounce from the downtrend all the way through, have enough buyers to push us through this downtrend line, have enough buyers to then take us to 2131 and then push us through. So at some point, from a bull standpoint, you have to be able to consolidate these gains, digest the move, and allow more buyers to step in at better prices, so that when you get these big moves higher, people aren't looking to sell for the quick profit. All right, you want to see some consolidation. You want to see prices generally, people buying right around the same level, and that's why a consolidation works so well, because what's happening is people are buying all on the same level. When you get the breakout, that's exactly what they're waiting for. They're waiting for the breakout. They're not waiting for a breakout and then they're going to sell, because that's the beginning of the move, essentially. All right, so that's the point I'm trying to make here, is if you look at a trade that we just made in HRS, we made it in both the core and the trading accounts. And again, if you're not signed up for the free open house, go ahead, sign up for it. Just go to turtlefollower.com. You'll see the login for, or the area for the free open house. All right, and you could sign right in. But what essentially was happening is we consolidated, we got the breakout, and then we got the move. All right, so now from either standpoint, that's exactly what buyers in this area were waiting for. All right, and then you have people like me that don't buy in the consolidation, that wait for the breakout, and then say, you know what, I want to be in, and I'm in. All right, so we made a nice 2-day move on this, and depending on which account it is, you can see I have both the core account alert in and the trading account stop in. And depending on which account we're in, I could very well just say, you know what, I want to take the quick profit in my trading account, and I want to move my stop all the way up here to 87.65 or something along those lines, and lock in the quick $200 or $300 profit that we made in 2 days. All right, again, depends on which way you want to trade, which way you like to trade, and that's why you run both portfolios. So again, if you're not signed up for the open house, head on over to turtlefollower.com. It's on every single blog post that we're doing until the end of the year, because it is only until the end of the year. And then if you are on the open house and you like the way we're trading, I hope you sign up as a member. But either way, this is just another way to learn how to trade. Again, I'm just trying to give you everything that I understand the markets to be, because it really is just a simple transaction between buyers and sellers, and the way you interpret it is really what makes the analysis that I'm doing here viable. All right, so that was the S&P. And again, we're looking for some type of consolidation. Now here on the NQ, the NASDAQ futures, you still have that same downtrend line in play. Okay, but the difference here is that we're pretty much going sideways. All right, and what I like so much about this setup is it's almost identical to every other setup that we look for in trading our stocks. And what I mean by that is you have a weekly consolidation, and then you have some type of tighter range right near the highs of that weekly consolidation. That happens to be this range right here on the daily chart. All right, so that range really goes from 441 to 4731. All right, and at some point, either we're going to break to the downside or we're going to break to the upside. But from a, again, technical perspective, breakouts and consolidations usually resolve in the direction of the previous trend. And with that said, previous trend has been higher. So here, I like the setup in the NASDAQ a lot better. And if we look at the NASDAQ composite itself, you can see a very similar situation, all right, where you have resistance. You have that key level right here around that 48.80, and then you have the really big level down here around that 45.77. Okay, so there is that little range. Just trying to get it to look right. There we go. All right. And again, you can see that we're now consolidating in the upper half of that larger weekly consolidation. You can see that same pattern right here on the daily chart between 51.62 and 49.09. And again, we're looking for a resolution to the upside along this uptrend line. All right. Let's go. Keep moving on. The Dow. All right. Similar to the NASDAQ, but look at the weekly chart. All right. This is my concern here, is that we're not even testing. Let's remove this drawing. We're not even testing the highs of the year. Instead, what are we doing? We're putting in a lower high. All right. So this maybe looks like it wants to roll over a little bit. All right. We've identified some key levels, 18,274. We've identified 17,464, and then finally 16,956. The other big, huge key level is right down here around 16,000. Not saying that we're going to go there, but from this chart pattern, to me, it's very possible. All right. So you can look at this in one of two ways. You could look at this as, hey, we're starting to maybe roll over on a lower high. You could look at this as, hey, maybe this is an inverse head and shoulders pattern. I mean, it all depends on which kind of glasses you have on. That's why technical analysis is so difficult, is everybody has their own way of looking at things. For me, from my perspective, I'm a little concerned this is a lower high, all right? But I do like the fact that we're holding this 17,000 level, all right? So a breakdown below 17,000 puts a little more merit on the lower high side. A hold above 17,000 and then a move maybe over 1782 or even 18,000 then starts to say maybe this is actually just an inverse head and shoulders. But this is actually one of the cleaner patterns from a daily chart perspective that we have between this and the NASDAQ. These are very clean. The S&P, a little dirty, all right, a little confusing. And you can see the same situation here on the Dow itself. Nice little consolidation, looking for that breakout, and then probably going to see some resistance right around 18,000 or so. All right, and the last one, the Russell, all right, had a strong move higher. This is just an ugly pattern. No matter which way you look at it, just an ugly pattern. But from a weekly perspective, you can see, you don't even have to zoom in on the chart, but you could see essentially we were making higher highs, and now we're starting to consolidate along a downtrend. All right, so now concerned that this one maybe leads us lower along with the Dow, all right, or maybe does the other three lead the Russell higher? Who knows? Again, we had a nice move higher this week in the Russell. All right, but we have a lot of lines going on here. So you know what? Let's just simplify this a little bit and clean them all up. All right, and we'll just look at this from a clean perspective. All right, so the first thing I see is this level right through here, right around 1200. All right, you can see it was support, support, resistance, resistance, and then resistance. Next level I see is down here around 1070. And then the last level that we're looking at is really in this tight range between 1125 and 1110 or so. So either way you look at it, the Russell is really just going sideways. You could draw this trend line in place and it actually becomes a channel. All right, so maybe we're bouncing off the bottom of the channel looking to go up and test this 1200 area. I would assume we would have some significant resistance here at 1200. But you know, the top of the channel is right around 1210 or so. But from a weekly perspective, it looks like we want to roll over. From a daily perspective, maybe we want to move higher. So if you take a look at the rut itself, you know, similar situation, you see that it actually is just going sideways. All right, and there's that 1200 level once again. So either way you slice it, markets aren't really lining up, and there's a lot of conflicting information out there with the Dow and the rut looking like they want to roll over, the NASDAQ and the S&P looking like they want to move higher. So just keep that in mind as you proceed here. This is not, you know, have to jump on it and buy at the start of the year. If you didn't trade really until next year, I think that's a viable solution. But if you were going to trade, you would want to be looking at 4 major sectors. The first one would be the XLP. It's actually outperformed the market, up 4% over the last 30 days versus the market being down 0.68%. But you can see that we are looking like we're going to break out over that 51 level. All right, so you want to look at the XLP, which is consumer staples, and you can also see that it is trending along that trend line there. Another one you want to be looking at is the XLK, which is the I guess the cleanest and the nicest looking potential breakout. All right, you can see it actually is just going sideways, and it has been for some time now. So that has led to some of the underperformance that the market, compared to the market over the last 30 days, but it is setting up very nicely for a move and a breakout over that 44.50 area. The XLF is another name you want to be looking at. All right, looking at stocks in that sector. These are the financials. All right, so we did have a slight breakdown. We're below the 50-day moving average, but it looking like it wants to set up and potentially move over that 25. It's actually hit 23, 25 twice. From a weekly perspective, it's just going sideways. But financials have been outperforming, the market, or they were outperforming the market, and now they are underperforming as we go forward here. And you can see that by this last 30 days of action. And the final one, the XLY, discretionary names like Disney and Amazon. Right. And again, sitting towards the lower end of the range, but looking like maybe it's going to find some support at that 200-day moving average, turn around and move higher. So to put this all on a tight little bow, I guess, for you, what we're looking at is, the markets are in need of some type of consolidation. All right, they have been for some time. We had that strong move. They're very erratic as of late because of the low volume environment. So what I would like to see, ideally, would be a continued move higher, and then some type of consolidation before we go ahead and break out. But remember, we are consolidating in most of these names, and from a technical perspective, that usually resolves to the upside, all right, or to the direction of the trend, which in our case would be the upside. And that goes for the asymmetrical triangle that we're seeing in the SP or the S&P. And that also goes for the consolidation patterns that we're seeing in the NASDAQ. So I'm leaning to the market potentially moving higher for us. But everything is up in the air, and it all depends on what the market wants to do. We just have to be prepared for it. Now, before I let you go, I just want to point out two trade setups that we had in the model portfolio. All right, these are both the short side, and one resulted in a small loss, one resulted in a nice profit, and that's just the exact point of one of my main principles, the uncertainty principle, which you can find on the blog, where you can have the same trade setup in any name, and it just works out differently. So here was one in Mosaic that we actually got stopped out of this week. You could see it was trending to the downside. We had consolidated, and we're breaking down. We found a good spot to get in, and sure enough, all right, we got in here on the 21st. We had a nice breakdown, a little reversion back, had a nice big breakdown there. That led us to saying, you know what, we're consolidating, we're trailing our stop now, we're breaking down again. And then, in 2 days, we were stopped out of that move. So what was a $100 or $150 profit quickly became like a $60 loss. All right. But on the other hand, not that we traded it wrong. All right. It just didn't work out. On the other hand, we had him trade like APC. Again, downtrend line, found the weekly consolidation, looked for confirmation on the daily chart, which we had, okay, right through here. And we're able to get a nice move out of it, trailed our stop, and eventually got taken out right around this 47.58. So this one was like a nice $400 winner. All right, so again, I just want you to understand that when we come up with these trade setups, and these were both made in the trading account model portfolio, because that's where we go long and short looking to generate monthly income. Both of these trade setups were almost identical, but one worked and one didn't. And that's just the nature of trading. One that we took in the core account, in case you're wondering what the difference is the core account is primarily, or it is long only. It's made for, or it meant for some retirement and custodial accounts, the ones where you can't have margin. And you could see that we were in a nice trade, trailed our stop multiple times. We're finally taken out of the trade on the move under 215. Now looking like maybe that was the low point, but the name of the game is to just take the probabilities, follow your system, and then we took a nice, a small profit out of this one, about $60 or $70 profit out of this trade. But these are meant to be different, traded differently, and it's all a matter of which one you feel most comfortable with. Either one is a viable solution, and if you haven't had a chance to, definitely go ahead, check out that open house, the free open house we're running until the end of January. I'll put a link in today's blog post that has these videos in it. So if you just go to turtlefollower.com, click on blog, and the nightly recap from the latest nightly recap will have the sign-up sheet for the open house, and you'll get access to all the locked areas. You'll see exactly what we're going over with members, and what we do go over with members. Just as a little insight, if we look at a trade setup like ACE, we're preparing for next week. All right, so this is a trade setup. We have about 10 other ones for our core account that we'll go over, and what we're looking at here is a weekly consolidation. Now you can see it's consolidating on the daily, looking like it's getting ready to break out, and if it does, we'll happily take that trade with a stop somewhere in the 112.50 or maybe even a little lower, 111 area, depending on when exactly it breaks out. But I would say it's probably going to be closer to 112.50. And as long as it meets our criteria for entry, a nice breakout. We don't have earnings within 10 days, and if it's within the diversification of the portfolio, these are all things we look at, then we will happily take the trade and not think twice about it. So that's a little insight into what we do. Again, if you want to take a look at that open house, check out today's blog post. It'll have that login or sign up sheet, and you'll get instant access to those areas, and that access will end on January 1st. So at that point, you can re-up as a premium member, get your 30-day free trial, and try it out for even longer. But other than that, that's it for this weekend. Members, head on over to those premium member videos that are located lower in the blog post. And if you have any other questions, please let me know. Other than that, enjoy the rest of your weekend, and we'll catch you during the week. Take care.